Hey guys, this is a market update. We're at such a pivotal time right now. Everything is coming to a head within the next few months. I want to try and explain that in this video. So we all know about the ETFs. 10th of January, they're going to be approved or denied essentially. Very, very close. We've got like 6 weeks now. Now, obviously a lot of volatility around this event, but the macro is this tidal wave that is about to flow into Bitcoin as well. And so I want to discuss that in this video. I've got a ton of data that we're going to go through. In terms of Bitcoin right here. So for me personally, I'm just going to say this. If we break through this 42 level at some point, Bitcoin goes to a new all-time high. That is the level at which we just break through, all of this, right? The previous bull market, got a sell-off event, recovery here, a lot of support and resistance around this area, right? This, all that is broken through. So we broke through this here. We've broken through this lower level, this upper level here, 41, 42,000. If Bitcoin goes above there, probably the ETFs, if they get announced, it will. If they don't, then we're going to sell off and then we'll just go again because the ETFs are going to happen. Might be the 10th of January, might be 2025 or 2026. Doesn't matter either way. If we get a big sell-off, I'll keep buying because of how the macro is turning as well, which I want to get through in this video. If you're a trader, check out the Bybit deposit bonus down in the description, up to $30,000. If you trade on there, check the link down below for all the details. Before we get into the macro, which is the tidal wave that I want to trade, and that is going to push us to new all-time highs this cycle. I don't think it's the ETFs, it's just the absolute wave and expectation of the macro. Let's look at Bitcoin as a network, because the macro is one thing, right? And so you can trade that. If you want to trade that cycle, if you're looking to trade the Bitcoin cycle, which is peaking sometime in 24, 25, it's actually the macro cycle that you're trading. But if you're investing in Bitcoin or trying to trade Bitcoin, the only way it actually improves each cycle is because of the network fundamentally growing. So let's just look at that. This is Bitcoin hash rate. This is at an all-time high. These are Bitcoin active addresses. You can see the 2017-18 bull market here, a massive peak and a drawdown to a bear market. Then you have the massive bull run in 21, 22 to a peak and then a bear market. You can see that active addresses are in a massive uptrend. The network is so strong and it's continually growing. And that's what can fundamentally push us up along with the macro cycle, the price cycle, right? The 4-year price cycle, you want to trade that, but you need the secular growth, the long-term growth, which this is showing us. So hash rate and active addresses up. Now this is active addresses and we've just put the Bitcoin price on again. So you can see that when active addresses spike, that is the top of a bull market. So if you want to look for active addresses and see those spikes, if you're looking to trade a cycle, the cycle plays out. You can see active addresses when they spike, that's usually a top. We're not there yet. If you look at other, on-chain metrics, you'll see big spikes which show us the peak in bull markets. But we're seeing this network is extremely strong. Bitcoin is not the best performing asset. There are others that perform better than it. I mean, Solana's performed better than Bitcoin over the last 12 months. Right? Nvidia has outperformed Bitcoin over the last 12 months. So there's ways to play this cycle. If you're looking for trading a price cycle, there are going to be many things that outperform Bitcoin in the crypto world. But if you're a longer term investor and you're looking for somewhere to park money, you've got some savings and you're looking to either invest in maybe property or real estate investment trusts, other types of index like the S&P and NASDAQ, what are we looking at here? So this is, I think, a 1 year of all of these assets. You've got Bitcoin here, you've got the FTSE 100 in the UK, right? So exposure to Europe and the UK. You've got DAX and Stocks 50 here, which is Europe, gold here, and then you just got 2 individual stocks, Nvidia and Apple. So Nvidia has outperformed Bitcoin. So maybe you say, hey, that's just a better investment than Bitcoin. Well, investors can't really think like that. You can't just buy one stock. Bitcoin isn't a stock. Bitcoin is more like a diversified index, much more like S&P, NASDAQ, or gold. So it's outperforming indexes, right? So when you're looking at a broad diversified index, it's miles ahead of anything else. So it's not going to be the best performer throughout this cycle. There are going to be altcoins that massively outperform just because they're in their first cycle or they have a narrative that pumps or simply because they're worth not a lot, right? They can be worth maybe 50, 100, 150 million, and they can go to maybe $1 billion because, it's crypto, right? You have very, very low float coins, very high, fully diluted valuations. A small amount of trade can push up the price a lot during one cycle. But if you're trying to trade or invest over 2-3 cycles, or just trying to put some assets in a retirement fund, then, diversified investments have to really take most of the bulk of that. Bitcoin outperforms everything. So Bitcoin is an extremely strong asset. I'm not saying put everything in BTC and it's only BTC. It will be outperformed, but any logical investor that is putting any money towards S&P, NASDAQ, other types of index to get some kind of broad exposure and to protect themselves from currency debasement, this is why the ETFs are in demand, right? Because it's the diversified index, it outperforms everything around here, and people want that. So that's why the ETFs are coming, whether it's January or anywhere else. It does outperform other indexes. It will continue to do so for a long while, just because of the fundamental growth in Bitcoin. It's not even close to being mature yet, and so you've got a lot of fundamental growth there. That's why the ETFs are in demand. It's not the ETFs pushing the price up. You're going to get a ton of volatility through a price cycle. But if you're trying to invest and put money somewhere for a while and actually escape fiat currency, Bitcoin is clearly one of the best ways to do that. You can see the outperformance, right? Nvidia outperformed Bitcoin, but Bitcoin as a diversified index is in demand because it's one of these things that you can say, hey, this is actually something that is outperforming other indexes at a large scale. In 6 to 12 months, the macro landscape is going to be wildly different than it is now. And that just happens to coincide with the Bitcoin halving, which is in April next year. The timing, all of this is insane. And if you're investing or trying to trade this price cycle, this is so important to see what's happening. So this is global supply chain pressure and the city inflation surprise index. They're at big lows, right? They are nowhere near elevated. So that's just one part of this. We also have this, which is the Fed's BTFP, the Bank Term Funding Program. This was a temporary program where banks who were essentially completely insolvent could sell all their treasuries back to the Fed at par, meaning that they had some liquidity and they weren't insolvent again. This keeps going up and to the right. This shows that banks have a massive problem with rates right here. Now, this also means that credit is going to contract from those banks, leading to a big slowdown, which we are seeing come out all across the world. Even the States is just starting to tail off right now. Now we can see here, this is core PCE. This is what the Fed looks at. This is inflation. You can see this trend to the downside. So again, this is too high. So the Fed are going to keep their rhetoric high, but you don't trade for where we are now. You trade for where we are going to be in 6 to 12 months. This is going to be lower. You've seen everything coming down, all of the data. We also see the employment rate still very, very low, the unemployment rate, but just starting to tick higher. So an important thing to watch. This is really what the Fed are going to watch. If this ticks up to 4, 4.2, 4.5, that's when they're going to start, saying, we need to maybe lay off the rhetoric a little bit, because the Fed's remit is full employment. And when this starts ticking up, they know they've done enough. And if the labor market loosens, inflationary pressures from wages, which is the main thing in the States especially, is just not going to be there. So we're seeing a huge inflection point down. This is all coming around right now. We're in November, December 2023. The halving is, 5 months away? We've got April for the halving. You can see what happens here during the halving to Bitcoin. So this blue is this cycle. Each cycle we have a low point around 900 days after the previous halving, and then we just start to climb higher. This was the pandemic, so a little bit of an outlier. If you look at the gold line here, this is the average of all cycles. So yes, we see a kind of pump from the lows, and then a bit of a consolidation here, and then we have the halving right here. After each halving, we've had a huge surge in prices to all-time highs. So for right now, price action is irrelevant. I don't care what the price, I have no interest where the price is right now, because you're looking at timing, you're looking at the next 6 months of potential huge volatility to the upside in Bitcoin, right? Every single previous cycle. That just so happens to coincide with the macro cycle, which is showing inflationary pressures coming down massively, unemployment starting to tick higher. So huge volatility over these 6 months. But I would just invest through the whole thing, because this is the prize if you're in Bitcoin. That's what you're looking forward to, right? So that is still a way away. You're looking at 12, 18 months for maybe highs, but a huge rise after the halving. We can also see that the Fed has not raised interest rates since July. And this is the most important thing. People are not talking about this enough. The median time between last hike and first cut is 6 months. And that's data going back to the 1980s. They stopped cutting in July this year. You could be looking at January, February for cuts. That's how close we are to this stuff. Now, the Fed have said higher for longer. They've got the BTFP, which is bailing out the banks. So they can keep rates up here because the banks aren't trading those rates because they can sell everything they want back to the Fed at par. So they're fine, right? So what we're seeing is July was the last rate hike. So we're looking now, median time would be somewhere around January, February. Even if it's longer, you're looking at March, April, May for rate cuts. And the end of this hiking cycle and the start of the next cycle, which is easier environment from the central banks, some policy from governments trying to push the next wave of growth. And that's coming right around the time of the Bitcoin halving. Cannot stress enough how utterly insane this timing is. The rate hiking cycle coming into the halving, coming into ETFs potential, and the election as well, which they always want to pump markets for. So they're all intertwined, and that is what I'm trading. What happens in the next 5 days, or even with the ETFs, I think is actually quite irrelevant. The reason why BlackRock and Fidelity are now bringing on Bitcoin ETFs is not because they suddenly love Bitcoin. It's because they have demand for Bitcoin from their clients. Their clients want to buy it, and they're saying, you haven't got this thing. We want to buy it, make it available. And that's what's happening right now. That in itself is major. Even if that doesn't come, the macro cycle is playing out yet again. And Bitcoin inflects to the upside during that cycle, which we've seen. The reason it does is because it has fundamental growth. And that's why these investment firms want to bring it on and have some percentage allocation. It is completely absurd to think that you have a diversified portfolio and don't have an allocation to this asset. That's my opinion anyway. If you are a trader, deposit bonus on Bybit up to 30K, link down below. I'm James, this is MoneyZG. Cheers for watching, and I'll see you in the next one.